Ben, Sequins raised nearly $400 million for their Bitcoin Treasury strategy. That's more than MicroStrategy did in 2020, yet their stock just cratered. What do you think went wrong there?
Yeah, you saw a lot going on in the Bitcoin Treasuries market, particularly as you see more and more of these companies entering the market. Investors start to have choices, and you start to see capital rotate throughout these different opportunities. And what you started to see was you saw capital coming out of the slower plays at the moment, like the MicroStrategies that have achieved such scale that the stock isn't quite as volatile, and you saw rotation of capital into the smaller plays in the space where people are really looking for that hyper growth phase in the Bitcoin per share metric. And as that happens and capital rotates into small cap and small float stocks, it can have a really drastic impact on the prices. And I think that's what you saw broadly across the industry was a lot of money moving into these stocks with really small float, causing those spikes, and then you saw some profit taking. Sequins is a little different. They just got through the capital raise. And as a part of these capital raises, there's something called PIPE investments, which is private investments in public equities. And it's effectively the selling of equity to institutional investors as a part of raising that capital. And in that process, there's a period of time before those shares get registered with the SEC and they actually become available for those investors to trade. And I think that's part of what you've been seeing along with Sequins right now, is those investors now have access to their shares.